Good morning, everyone. My name is Latina Ruseva, and I am a CPA at ABC Company. Today, I'm going to speak about federal tax update in ordinary and necessary business expenses. The agenda is Code Section 162, Ordinary and Necessary Business Expenses. The recently held tax case of Tanzi, Code Section 262, and Rule 142. So what is a business expense? Business expense is the one incurred within the trade or business. And Code Section 162 defines the ordinary and necessary business expenses as those that are in the conduct of the taxpayer's business and are directly attributable to such a business. The IRS defines ordinary and necessary as ordinary are those expenses which are common and accepted in a trade or business, and necessary are those expenses that are helpful and appropriate for the trade or business. Also, Code Section 162 allows taxpayer to deduct all the ordinary and necessary business expenses which are paid in and incurred by the taxpayer in the carrying of the trade or business. And the trade or business includes also performing services as an employee, and therefore an employee may also deduct expenses that are ordinary and necessary to his or her employment. So IRS issue a deficiency to the family, Lawrence and Patsy Tanzi, for them trying to deduct expenses, and they call them as adding to their general knowledge. Those expenses were home internet and cell phones, computer equipment, and professional library and satellite television. So let's see if those expenses maybe are tax deductible or not. Generally, expenses incurred by a university professor to engage in the teaching and research expected of the professor by the university are ordinary and necessary. The taxpayer has to substantiate the claimed amounts proved by the maintained records. Those expenses were treated in whole or part as a non-deductible personal expenses in the absence of adequate evidence substantiating the business purpose of the expenses. Or long story short, they have to define how much of the internet use was defined to adding to their general knowledge, as well as the phone usage. So Rule 142 states that the burden of proof shall be upon the petitioner except as otherwise provided by statute or determined by the court, and except that in respect of any new matter increases in deficiency and affirmative defenses pleaded in the answer, it shall be upon the respondent. So while the court found credible the couple's testimony that they spent significant time and resources to educate themselves, the court did not believe the expenses were ordinary and necessary, and rather put them and defined them as personal living or family expenses, which are non-deductible under Code Section 262. And Code Section 262 states that no deduction shall be allowed for personal living or family expenses. As far as the computer equipment, the Code Section 274 states that no deduction or credit shall be allowed with the respect of any listed property, which are defined in Section 280. And Section 280 defined as a listed property any computer or peripheral equipment. So therefore, in the Tanzi case, where they try to deduct a computer equipment, they have to also satisfy the strict substantiation requirement. So the computer equipment is a property for which users a taxpayer must provide to substantiate records for its use in order to qualify for the deduction. Any tax receipt, anything, and how much they use it for adding to their general knowledge again. So the tax court conclusion, or also the takeaway of this presentation is, while the court might consider the cell phone and the internet use ordinary and necessary, Tanzi must provide the extent of the use by maintained records. Based on the absence of adequate evidence substantiating the business purpose of the claimed expense, the court concluded that all of the educational expenses fall under the Code Section 262 and are non-deductible personal expenses. Thank you very much, everyone, and if you have any questions, you can reach me at my email.